afternoon. This is Lance Bryce with Thrive Mortgage. Today is Thursday, the 13th of April. I hope you're doing well. We are seeing interest rates nicely lower today and maybe headed a bit lower still. So we're going to talk about that just in a moment. The reasons why, obviously, we saw good reads on inflation with reporting today and yesterday. So we're going to dive into some of the internals of that in just a moment. Let me give you the updates as to where we are. According to Mortgage News Daily, they run an index that's based on bond prices. It is a really accurate day-over-day gauge of movement in the market. It's not necessarily where we are on any given day. As an example, I would be pricing better than what I'm going to be showing you in these indexes today for most scenarios. But again, call me for specifics. These are not intended to be rate quotes, y'all. This is intended to show you how the market has moved day over day. So here we are in the national average, 6.42% today. We were at 6.52 yesterday in the Mortgage News Daily index. We were at 6.57 30 days ago. So we're about 13 basis points, 15 basis points better than we were at the start of the month. So what's caused that move downward is reads on inflation. Yesterday, we saw a nice, unexpectedly friendly consumer price index report. And y'all, when I say unexpectedly friendly, it's not unexpected that we're seeing improvements in inflation. It's not unexpected at all for us to be seeing inflation coming down. We have been reporting that, and we've seen very nice, substantial reductions in inflation, and we have seen interest rates follow those reportings lower. We believe that will continue, or at least I believe that will continue. But we didn't necessarily expect yesterday to be a good number on the CPI because of the way the year-over-year comparison of this particular report works. We were a bit nervous that this one on a year-over-year basis may not have given us a nice headline number that the bond market would have traded in a friendly way, and yet it did. We were expecting 5.1, that's what was forecast as far as inflation is concerned. We got 5% flat, which was a nice surprise to see it better than expected, albeit just a little bit. Let's look forward a bit to the May number that we're going to get on the 10th of May. That will be for April's Consumer Price Index. This one may well move the markets in a really big way. We were concerned about shelter costs. Remember, that makes up 43% of the Consumer Price Index. We are seeing significant reductions in year-over-year rates of increase in rents. That number, since rents are tied to leases that are 12 months long in almost every case, are not reflected in the CPI in the current month. It takes a while for that lagging indicator to work its way into the number. And once it does, once those year-over-year comparisons take into account that shelter cost component, we should see the Consumer Price Index headline number come down fairly dramatically. We suspect, and again, this is when I say we, I'm referring to folks that I follow for the information that I provide on this call, expecting a pretty significant impact from shelter cost reductions in the April reporting, which will be again on May 10th of next month. So it's going to hold on for that report because that one may move rates in a very significant way. Well, today we got a producer price index number. This is a read on wholesale prices, y'all, that came in much lower than expected. This report was expected to be flat. It came in 0.5% deflationary, which means we actually saw wholesale prices decrease on a month-over-month basis. You have to go back to spring of 2020 to see the last time that we saw negative numbers on the producer price index. That's a very good sign for future prices, y'all. That's a very good sign for where consumer prices will be headed because it's obviously front-loaded on the wholesale side. They see those reductions before consumers do. So very good news, much stronger than expected, and we are seeing a bit of a rally. Now, we would be seeing more movement in interest rates than we are. I believe that this news was sufficient to have moved interest rates lower than we're actually seeing, and that's owing primarily to the fact that the Dow Jones is loving it, and we are seeing folks putting a lot of money. We're seeing a lot of capital flow into stocks, and just looking at where equities are now, we're up 287 points as of 12:30 as I'm recording this. So nice rally on the Dow. It is taking some of those investor dollars out of the bond market. In any event, that will probably equalize. Would expect to see potentially some better improvement based on the reporting that we've seen on inflation. Rates are going to follow inflation lower, y'all. As inflation improves, we're going to see rates improved. And I believe we may see a bit more improvement yet just based on these two reports. And buckle up for the May CPI reporting on April's numbers. We may see significant movement there. If you'd like for me to come and present to your office, I would be happy to share with real estate teams that are out there any of this information. I do have a number of presentations that I have given on this topic and would be happy to make that available. The more we know, the more we're able to help folks, the more we're able to protect them and get them the best possible pricing. So I am all about doing that. If you'd like to have me do that, just reach out to me. You'll have all my contact information on the screen. Stay blessed, stay safe. We'll talk to you next week.